Good morning, everyone. How we doing today? What is it? Wednesday, July 29th, and this is your daily financial news where we talk about what's going on in the world of investing, money, cost of capital, real estate investing, all that good stuff. A couple of quick things. We have a challenge on this channel for these specific segments, which only happen once a day. We're shooting for 150 thumbs up for the week, Monday through Friday. And if we do that, I then give you an hour Saturday where I answer all of your questions. That playlist is growing. It's probably over 5 hours now. So if you just have general questions about real estate investing, make sure you check out that playlist because all the questions come from this audience and we do our best to answer them. But I got to tell you, this is the first week that I don't know if we're going to hit the goal. All right, it's Wednesday, and as of the Monday video, which is the 27th, we have 138 thumbs up, so we're 12 short. Yesterday, the 28th, we're sitting at 97, so we're 53 thumbs up short. So I don't know. If you like these going on, if you want to have an hour of my time on Saturday, I hate to ask, but you've got to go back and click on those videos and hit the thumbs up. Again, we're 12 short for July 27th. But man, as of right now, we're 53 short on the 28th, and I just don't know if we're going to get to 150. So I might have a free hour Saturday, so we'll see what happens. And then the other thing, I like to wear hats, so I finally got my own logo on my hat. So yeah, I have faith too, but we'll see. I got my own hat. I got 3 different colors: purple, gray. I'm just trying to check them out, see if it makes sense. But I figure if I'm going to wear a hat, I might as well wear my own hat. That's what I'm doing here. So, all right, let's move on to the day. That's why you're here. I think there's a couple of things going on. The next couple of days are going to be potentially very market moving. One of those is today the execs are getting grilled, right? The tech execs. I think it's Amazon, Google, Apple, and Facebook. That could be a nothing event, or that could be market moving. I think there's a general bias towards calling them monopolies, breaking them up. I certainly think that is a long-term risk. I don't know if it's a short-term risk as in today or even this year. But I do think if you look at the next decade, all 4 of those companies have different pieces that could be looked at as being a monopoly. So definitely something to be thinking about, and something people in the Silicon Valley have been talking about for a while now. So that'll be interesting to watch. I expect some hard questions for sure. I expect some interesting answers for sure. I expect, frankly, them to point at each other and say, they're my biggest competitor. So it could be entertaining. I certainly won't be watching, but I'll look for the synopsis for sure. The other thing I think that's important to point out is Q2 earnings have continued to be on average better than expected. I think a lot of that is quite simply low expectations. I don't think many people were expecting anything great. I take Starbucks as just one example. Yes, Starbucks beat top and bottom. Did I write it down? Yeah, so they lost 46 cents a share instead of 59. They say that business is recovering, but they're down 40%. Yeah, come on, really? All right. The other thing that really market moving is what happened at Eastman Kodak. I'll just call it Kodak from here on out. Talk about a company that is on the verge of just being fundamentally different, right? If you're I don't know, under 35 maybe, under 30 for sure, Kodak probably never hit your radar at any level. But if you really think about what Kodak's is, and I didn't put 2 and 2 together until I read some articles, they've essentially been a chemistry company. Now, they happen to be a chemistry company that was focused on photography and being the best at it for a long time, which has since been replaced by digital. So they've been struggling. But it looks like they're going to get a $765 million loan from the government to, I don't know if it's create a second business or rebrand itself entirely, but they're going to start making ingredients for generic drugs. It will be interesting to watch this unwind, but I think that's great news. I think that is great news. I think bringing that capability home is critical. And man, if you go back 3, 4, 5 months, we were talking about on this channel that that's something I hope happens. Is being dependent on companies slash countries that may or may not like you at any given day. It is interesting to see what is going on. So I think that is net positive, no question. My hope is that's the first of many, kind of bringing essential manufacturing home. Yes, it will be more expensive than doing it in some third world country, but it is, if we've learned anything from this lesson, we're already starting to improve. And that is, hey, let's bring some key things like, pharmaceuticals, generic drugs, and hopefully PPE back home. So that will be interesting. The stimulus is going to be the talk of the day. I'm going to go out on a limb and say, man, this feels terrible because our politicians really don't like each other. I think there's at least some stopgap measure so that the unemployment benefits don't reset to zero. Something has to be announced. We may not get the entire package done this week. In fact, I think it's unlikely. But my hope is these men and women come together and realize that doing nothing is not an option. So I'm hoping somewhere, somehow, and it's Wednesday already. Can you believe it's Wednesday? They need to come together by Friday and say, hey, we're going to, we're going to extend it a month or 6 weeks or something while we continue to battle it out. And oh, by the way, they have a freaking recess in August. I mean, just, man. Politicians. Anyways, I get the arguments. There was a University of Chicago study. 68% of the people are making more on unemployment. I get the argument, but we have to realize part of what got us through the first half, part of what made Q2 better than expected, is we put money in the hands of the people most likely to spend it. That's the lowest rung of the economic hierarchy. If you go ahead and send $1,200 to everyone, there's a high propensity for a significant portion of that just to save it, put it in the bank, pay down some debt. That doesn't help our economy, right? We need consumption. And one of the things that got us through Q2, as I just said, better than expected, is we sent money to folks that were most likely to spend it. And if we don't, the second half will come back with a vengeance, and there will be pain on pain as that lowest rung has to make some hard choices. So I'm going to put faith that that humanity will come around, and something will be done, even if it's short term. So it'll be interesting to watch. What else do we have? Oh, the Fed meeting ends today. It will be interesting to see what is going on. My guess is cost of capital will stay low for longer. I'm going to guess the Fed calls out second half weakness. I'm going to guess they're going to put pressure on the politicians to do something that they see second half weakness. So we shall see. Again, remember, the economy is doing a little bit better than we all hoped for, expected, all of that. And it's because we've given money to folks to spend that are most likely to spend. And you and I are most likely to save. That's what politicians don't get. They see this 600 number and they see 68% making more. But what they're not realizing is that's what kept us afloat. And that's important as we limp through the second half and hopefully get to treatments and or vaccines and or whatever means to get through this. Mortgage apps were down to purchase 2%. It's interesting to see the articles already go negative. This article I read this morning was talking about maybe first-time buyers are not as aggressive. Maybe maybe the real estate market is not as strong. I don't think it's that way at all. I just think there's no supply. I actually ran a test, and I'm going to do a second video on this later. But in brief, I took one of my pride of ownership rentals that I was going to sell for 160. I listed it at 169 just to see if owner occupants would be interested. And in 24 hours, we had 10 calls. And unfortunately, all of them wanted to buy it as an owner occupant. And that's not what I sell, right? I sell properties that are leased and tenant occupied. But yeah, we had 10 people call inside, maybe it's 36 hours, wanting to buy it. And that was 9 grand more than I thought it was worth. I thought it was worth 160. I just wanted to see how crazy the owner occupant market was. Now it's beautifully remodeled and clean and all of that, but it is interesting to see. And as you'll see in a second video today, or live stream actually, maybe I have the wrong business model, but we'll talk about that in a later video. What else we got? Scott's Miracle Grow. Again, a lot of people staying home. Not only, I brought this one up for two reasons. One, they raised dividend. A lot of you might be dividend investors, Scott's Miracle Grow or Scott's raised. But also they announced a special dividend. I haven't seen one of those in a while, a one-time special dividend. So clearly they are doing fairly well. Flip side of that, Six Flags, kind of expected, right? Lost $1.62 versus $1.01. Other than airlines, owning an entertainment park is amusement park is tough business today. We already talked about Starbucks, AMD, right? We talked about Intel. Was that Monday already? And AMD is kind of the flip side of that. They are crushing it. Their roadmap into the data center, gaming, they are doing big things. They are clearly winning at Intel's expense, and just really impressive. L Brands, kind of the parent company of Victoria's Secret and other retailers, has announced a 15% headcount or corporate staff cut, meaning 850 jobs. And this is what's going to happen, folks. They announced this yesterday. Bad earnings, blah, blah, blah. Oh, by the way, cutting 850 folks, their stock went up. So I talked about this at least 3 weeks ago, that one of the things we're going to start seeing is headcount cuts and stocks are going to go up. This is that second order derivative that I talked about, and it is interesting. I saw an article yesterday about the K-shaped recovery. This again was first mentioned to me seemingly 4 or 5 months ago by one of the viewers, Jeffrey, and I agree with it. I think a K-shaped recovery is very likely, and now there are articles pointing to that. I think this one was on Yahoo Finance. It's pretty much like we said. The front side of the K was straight down. Everybody suffered. We're now getting back to the point where there will be a divergence. There will be plenty of winners, right? Those who own assets, those who have jobs that could be work from home. And unfortunately, there will be losers. And that doesn't feel good to say. But at least at some level, we each have individual choices, and we can choose to sacrifice, live below our means, invest, learn our markets, everything that we talk about here. There were times where, as a 19-year-old married young man, I could have made choices that would have set me on a different path. But because we sacrificed, and work for it, anyways, there's lots of choices that individuals make, and you can always choose different ones. But yes, a K-shaped recovery is, I think, all but certain at this point, unfortunately. And then one other thing that I'm happy to say I called on this channel weeks ago is U.S. home ownership rate is up. And I think it continues to go up. I think this is a trend you could bank on for 2 years. The rush out of big cities, which will mean, for the most part, renters, and they will become owners in other cities and or states. Home ownership rate is now 67.9%. highest since 2008. And just remember, 2008 was fake. 2008 home ownership was fake. There was 2 or 3% of those people that should have never been homeowners because the lending practices were bad. This 67.9%, most of that is legit homeowners. Down payments, real credit scores, real mortgage apps. And I think this goes higher. I think there's a chance this goes to 69, and if this continues into next year, could brush up on 70%. And just so we're clear, I think home ownership is net positive. I think it's a forced savings account. I think it is I think it is an investment that is maybe not understood or appreciated by many. If you only own your home and you pay it off, you will have a nest egg that is an option for you going forward. So I'm huge into that. So in the end, that's what I got for you today. I'm going to be paying attention to what happens at the techs, the 4 tech execs, 4 billionaires. Can you imagine 4 billionaires sitting right there and you get to ask them 100 questions? That's awesome. I mean, I wish I had some popcorn. That actually might be a meeting I would go to. I don't like meetings at all, but I might go sit in that room just to watch 4 billionaires squirm. Can you imagine their lawyers? Plead the fifth, plead the fifth. I don't know. It'll be fun. I'm sure there's not many times billionaires sweat. I'm going to guess they're going to be a little nervous today. So, entertainment. All right, everybody, let me know what you think of the hat. These are not for sale yet. I just always wear hats, and I wanted to see what they look like. I got 3 different colors. We'll see, but I'm going to wear my hat. I like to wear a hat in the morning, so I'm going to work out in it, see how it does. All right, everybody, take care of yourself. Remember, 150 thumbs up. We are 12 short on the 27th, so I think you'll get there. But yesterday, y'all didn't like yesterday. Yesterday only had 98, and I'm willing to give you an hour, but we got to do 150. We're kind of short. Take care, everyone.